Good day, guys. How are we all doing? Compliments of the new season. I hope we're all good. I hope we're all safe. So today I just wanted to share with you guys parts of our 2025 day trading mastery course. So the thing I want to explain today is just part of the core concepts part. So I'm just going to quickly jump into the charts and show you what I'm talking about. So I'm going to touch also on a certain setup which one of our members actually mentioned, and I'm going to try to state how you approach such a setup and how you manage the trade when it's actually running. So the first things first, whatever broker you use, if you're a day trader, that is, if you're a day trader, whatever broker you use on your charts. And also, this is for those who are not yet profitable. If you are already profitable, please, you can just skip this video. This is for those who are still working on themselves, those who are still struggling to understand how price moves. So if you're already profitable, I don't think this video will be for you. So, right. So if you're still working on learning your trading, what I'd advise is maybe start with putting moving averages on your charts so that you understand where price is moving. So, like I said, the moving averages I have on my charts, I have the 800 EMA. All these moving averages are exponential, they are set to close. So, I've got the 800 EMA, which is navy. In color, I've got the 200 EMA, which is black. I think you can see it on my chart there. I've got the 50 EMA, which is aqua. And I've got the 13 EMA, which is red. So for a video which explains these moving averages, I'm not sure if I dropped it yet. If not, you guys will just have to wait a bit. I'll drop on how these moving averages work. So the first thing you want to understand is your weekly market structure. So the best time frame I would say for me to just have a look at the weekly market structure is the H1. This is strictly again for day traders. If you're swinging, you have to be on the higher time frames, and I feel like the best time frame for a swing trader would be H4 to look at the structure which I'm talking about. So if you're a day trader, then this video is definitely, most definitely for you. So you want to look, you also want to have period separators on your charts. So you want to check where your week starts. So a double line demarcates a weekend on this particular chart I have. And this one, I think this was for Xmas. This was Xmas Day. So this was Monday, Tuesday, Wednesday was that Xmas. So it's just like a weekend. This was Wednesday. Sorry, this was Thursday, and this was Friday. So the setup I want to explain happened on Friday, but I'll try to touch on the build up from what happened and up until we go to Friday. So like I say, the H1 is to be your best time frame. So basically what you want to look at is your price creating higher highs or higher lows. Is your price creating lower highs, lower lows? Is your price ranging or choppy? Those are the main things you want to look at. So you can just simply, you want to simply just mark your highs, your lows, so that you see where the trend is going. Once you decide where your trend is going, or once you figure out where price is most likely going, it becomes a bit easier. So I remember if you watched the last video I had, I actually anticipated price to come here. But this is one thing I want to also point out. As much as we were looking for price to continue up into this level, into this 800 EMA, into this zone here, price actually didn't get there. It actually sold for the most part of Friday. So this is the main thing I want to explain. So remember, we don't trade what we think will happen. We trade what we are actually seeing price do on that particular day, on that particular time frame, on that particular trading session. That's what we trade because we cannot force price to go up when we know that price can play out either way. So how do you figure out that price is going to change its direction? So the main thing I would say would be just throw, if you're on a naked chart, just throw a Dayton EMA on your chart. Just watch how price plays around the Dayton EMA during the day. So on your H1, each time you see your price trading above the 13 EMA, you just know it's going up. Each time you see your price below, just know it's going down. So this is just like the general basis of how price will be moving on that particular day. So I want to touch on okay, I mentioned that no matter what broker you use, the main thing you also want to have like besides your period separator. So the first thing you need is your period separators. You'll find it on your settings there. Maybe I'll do a video uh, about it. So it's your period separators. The next thing is your EMAs or just one. Just if you don't understand how price moves, you need an EMA or EMAs. If you understand how price moves, then you don't need the EMAs. Then the third thing is soon as the day opens, you want to mark the open price. What is the open price of the day? Let me just say open price. You want to mark the open price of the day. You just put a line. If you can get an indicator which shows it, it's still fine. So for me, you see I've got an indicator which just puts the line for me, so I don't have to work extra hard. So you want to mark your open price, then you want to mark your session highs and lows. So open price, and the fourth thing is you want to mark your session highs and lows. Then the last thing is you need to mark the previous days, yesterday's, which is yesterday's high and yesterday's low. So it's the previous day's high and the previous day's low. So if you mark these highs, it will also just fall in line somehow, but you also need to mark the previous yesterday's high, yesterday's low. So most intraday setups or most setups which day traders get, they form around these levels. Yesterday's high, yesterday's low. This is where your liquidity will be lying. I'll just show you just now on the charts. You also want to mark your session high and low. I'll explain this just now. You also want to mark your open price, have an EMA if you're still struggling with trend, figuring out where price is going. And you also need your period separators. So once you have these things on your charts, you're good to go. So if you notice this zone is actually the day open here. You see price actually rejected here, but when they broke, they never retested. So for me, that's still a point of interest. At some point, price can potentially get towards that area. So that's why you see it's actually marked. Here you see a zone, but let me not talk about that in case I deviate from what I actually wanted to explain. So starting from okay, I'm just going to start with this price action from Monday. So on Monday we started, we are in an up move. Price was pushing up. I think this setup I also explained it. I'm not quite sure. So if you had run your fib on this push, which happened the last Friday, breaking structures here, run your fib, wait for a bullish engulfing as per candlestick trading Bible. That would have been a buy setup right here with a stop loss below the zone. So 1:2 is somewhere here, maybe 1:3, 1:1 is somewhere here, 1:2 is somewhere here. Let's see if we actually got to 1 to 3. I don't think we did. Yeah. So 1 to 3 will probably be at the zone which I mentioned, depending with whether you're swinging or you're day trading. But anyways, from here, Monday, you can see price was actually pushing up. What happened on Tuesday? On Tuesday, price, we came to the charts. Of course, this is like for backtesting purposes because this is like the heart of festive. So this was Xmas Day. So the day before Xmas, price was actually just flat. For the most part of the day, price was flat. Then all of a sudden, we had this candle here. Oh, so take note that we do have an order block here. So again, you need to have confluences because you don't want to just use the moving averages on itself. You want to have confluences. So we do have this order block before this minor move up. So for me, that would have been a valid OB. So after price moved flat for most of the day, we can see it failed to come below the 13 EMA. Already that's showing you that the chances of this price coming up are actually high, right? That's the first thing. You also have an OB here. So if we do break, then of course we might consider shorts. But the fact that we're still respecting the moving average and we're still trading above the OB, which was actually retested, that gives us the bias to actually buy. So once you have your bias, usually that's when I jump to trading view. So before we get to Friday, I'm just going to switch to Monday. Okay. Right, there we go. All right, so I'm going to zoom in where I want to explain. So you can see the reason I jumped to TradingView now, TradingView, I've got my session markings. I've got a session indicator which shows me my session. So this light blue zone you see, that's my London session. And this gray zone you see, that's my New York session. So I'm mostly a New York session trader. So what you notice is what I'm talking about, or the candlestick pattern I'm talking about, actually happened during what? During the New York session. That's the first thing. This is the zone we're talking about, or the order block. So I've got my confluence that price is most likely pushing up, with the fact that, remember, we had a fib on the left-hand side, which is showing us a buying bias. So for now, my bias to buy is actually strong. All right. So once I get my H1 closing, I then jump towards to M15 because I need to have a better risk to reward ratio. Right. So when you jump to M15, let's check the time. The time was 16:30, 16:30 GMT plus 2. This is when New York equities market open, or the stock market opens. So that liquidity which comes into the market is the one which we mainly trade. So 16:30, that liquidity comes in and they do a stop hunt. So remember, we said you want to mark your session highs and your session lows. So for me, this was the Asian high. I'm just going to quickly extend it all the way here. And this was the Asian low right here. So because I do not trade London session, I'm not going to really explain anything on London. But if you were looking for a trade in London session, as long as you have the bias, you can just work with the 13 EMA, work with your session highs, session lows, wait for price to take out either of the sides, then look forward to trade in the direction of your bias. So for example, this would have been a good setup. The only thing wrong with this, there was no volume up until we got to the stock market open. And again, if you're taking a trade, you want to target the previous session's high or previous session's lows, depending with the range, or you want to trade a breakout and a retest, or you want to wait for price to actually take out the previous session highs or low as a liquidity sweep. So what is a liquidity sweep? It's I think the best person who explains liquidity sweeps from my own personal experience would be the inner circle trader. If you guys have time, you can just search ICT inner circle trader on YouTube. He's the best guy from my own point of view to explain what liquidity sweeps are. But anyways, what I'm looking for is for price to take out the previous session lows. So because I'm not looking really at Asian for this particular setup, or for this particular day, my main focus was on the London session high, which was this one. And I was also looking at the London session low, which is this one. This is the London session low. So the only thing you do as a trader, you just have to mark those zones. Once you mark those zones, now you wait. So stock market opens, liquidity comes, price does a stop hunt. You can see the type of candle we have. So At this point, we are on the sidelines. We are not trading until this liquidity sweep is finished. So soon as it is finished, now the sixth thing, remember we pointed out five things. The sixth thing is your candles. You need to know your candles because once the five things line up, the next thing you want is your candles, especially on M15 if you're day trading. If you're day trading M15, sometimes H1 as well, depending with your understanding of candles. So if you do not understand candles, please make time to go through the candlestick trading Bible. We went through it right here on YouTube, and you can just go through it and understand these candles better. So what candles are you looking for? You're looking for a doji, a pin bar, bullish engulfing. So we are bullish. So we're looking for a bullish engulfing, looking for a doji, a pin bar. Mainly inside bars are a bit tricky to understand from my personal point of view, but they also work if you do understand them. But for me, it's mainly a doji, pin bar, bullish engulfing. So once I get these dojis in here or pin bars or whatever you want to call them, these two candlesticks here, I know that the liquidity sweep is done already. So now I'm looking for a buy, right? So as soon as my liquidity sweep is done, the next time frame I'm going to go to, so at the close of this candle. So usually I just look at this. Let me use something visible. I just look at this level here. So as soon as that black first doji, this one which did the sweep closes, I just want to mark that area. As soon as I mark that area, then I want to drop to my entry time frame, which in most cases is usually the 3 minutes. Sometimes I use the 5 minute. It just depends with how I'm seeing the patterns develop or form. So just going to scroll back. Okay, we're going to zoom in. All right, so what I want to see on the 3 minute time frame, this is pointer number 7. What I want to see on the M3 or M5 is a market structure shift and price retracing into an imbalance or fair value gap. Again, if you don't understand all these, you need to most likely watch ICT, especially liquidity sweeps, fair value gaps, imbalances, all these words I'm mentioning. Because I feel like personally he's the guy who explains this way, way better than me. So make time to watch those videos. You can just check on YouTube. But anyways, on M3 or M5, I'm looking for a market structure shift. I'm looking for a fair value gap. All right. So from this low, what I'm looking for is for price to give me something like this. So let's say price was moving like this. Then I get a liquidity sweep here. Then price comes back. What I want to see them do is now show me that they're coming up. Then they have to retrace and tap either an order block, a fair value gap, or sometimes equal lows. Sometimes they hit equal lows, then the price will continue on its merry way. So those are the things I'll be looking for. So price should give me something like this. So they push up, market structure shift, retrace, then I enter the trade, then it will move. If I put 1 to 3 or 100 points, if I'm trading indices, that will still be perfect. So on the M3 also, what I pay attention to is the 13 EMA. I would say of all the moving averages, the 13 EMA is my best friend. So I want to look at how price is respecting or reacting on the 13 EMA with my bias in consideration. So remember, I've got a buying bias. So what I want to see each time price retraces, pushes up and retraces and taps the 13 EMA with a pin bar, a doji, a bullish engulfing, I'm in that trade. Whether it's the first retracement, whether it's the second one, because sometimes if price is not clear, you might wait for the second retracement and you can still enter the trade as long as there's confluences lining up, you can still execute the trade. So what I pay attention to is those reactions on the 13 EMA, near the 13 EMA, or slightly below the 13 EMA. Those three spots are where I look for the candlesticks, which I just mentioned. So on this particular day, you can see my point of interest is here after this liquidity sweep here. So price comes up. This is not a clean market structure for me, but considering the bias I have, what I would have done if I was trading this, I would have most likely waited to get this confirmation. So remember the doji, any pin bar, any bullish engulfing on the 13 EMA, I'm in that trade. Even if I had entered this trade here, because some might say, how do you know that price was coming down? You never know until it does. So let's say for some reason I entered here, because remember from this low and liquidity sweep, we've got this order block here. So usually my other way of entry is waiting for the break or break and close above the order block. That's my entry criteria. So here, most likely I would not have entered because I needed a break and close above the OB, which only happened here. So let's say I had entered there for some reason, I enter my trade here. My stop loss is to come outside the stop hunt because remember I mentioned that price can still come way to the equal lows of the stop hunt or of the liquidity sweep before they actually push up. So stop loss comes below here. Then depending with your risk to reward, personally for me, I always say I go for 100 points minimum. So if you mark out 100 points here, 100 points is somewhere right here. But then if you're using that entry and stop loss, you would see that it would have been looking something like this. It would have been a one-to-one trade, but either way, it's a good trade because you hit your 100-point target. Second target, you can use the previous day's high. So remember, we mentioned you need to mark your previous day's high. If you can get an indicator which shows you that, that's perfect. So personally, for me, I do have an indicator. I can see any green line you see on my charts, that's the previous day's high. Any red line you see on my charts, that's specifically for trading view. That will be the low, excuse me, low of the previous day. So again, how does price react on the previous day? It's either will break, retest, push up, which is exactly what happened here. So this also could have been an entry. So remember we mentioned again, each time price retraces into the 13 EMA, either slightly above, right on, or slightly below, as long as I've got a confluence lining up with that area, I'm taking the trade. So without even looking to the left, what confluences do we have here? You would have noticed that first thing is from this low to this high, you could have run a fib and waited for price to retrace into the 61.8 fib retracement. Let's actually do it because some people might say what you're talking about is impractical. So this is my fib. I have a bias. That's why I'm running my fib to the top side. So I know I'm in a buying motion. If you run your fib here, you see prices actually coming right into the 61.8. Why would I buy or what would make me buy? The only thing I'm waiting for is for my price to come back above the 13 EMA and I'm in the trade. Entry, stop loss, TP 1 to 3, or target the last high or target 100 points. So these are all also parts of trade management, which I also explain in another lesson different from this one. It's a whole different lesson altogether about trade management, how you enter and exit your trades. So I hope that's clear. But if it's not clear, you guys, please feel free to ask questions. So, like I said, 13 EMA is my favorite EMA, no matter what time frame I'm on. So, like I said here, you could have used the fib or just watching. Uh, and again, the fib, our setup formed on yesterday's high. So yesterday's high has been broken. It's now working as a support. The other thing we have right on that area. So yesterday's high is our main confluence here. Price takes off from here, comes up here. We do have an imbalance here or a fair value gap. ICT traders or those who understand ICT, I'm sure you can agree with me. Of course, we do have another imbalance here. Yes, we do have another imbalance here. But do these imbalances have any confluences to the left? Like we said, our main confluence is yesterday's high. So that makes this particular imbalance here a major point of interest. So yes, you might take a buy here, but if you see there was no momentum to take it up. But soon as we got to a major confluence, which was the previous day's high, acted as a strong support and price pushed up. You could have got a nice 1 to 3 trade, I'm sure, from here. From here, which would have been the entry. Stop loss always goes below the last low if you are now on the 3 minute time frame. Yeah, almost 1 to 3, but we are also happy with 100 points. So did this price give us 100 points? 60. Okay, 100 points was actually somewhere there. So that means most likely we're going to hold this trade. So we had a retracement back into an OB. So again, this is all part of trade management again. So once you enter your trade, usually you want to wait for at least one retracement, especially for those trading indices, because there's a lot of points or pips within that move, right? So remember, we want 100 points, but within that 100 points, price does not just shoot up. Most of the times, price will retrace. So as it is retracing, what are they retracing to? They are retracing to an order block. They are retracing to an EMA. They are retracing to an imbalance if there is any. We did have an imbalance here, but did we have a confluence to the left? Not really. Maybe we might have used this line, but it's slightly below. So we would have maybe waited for a reaction here, but that reaction did not come. The reaction only came when we got to the 13 EMA and this OB. So you could still have looked for entry right here. So these are all entry criterias if you are looking forward to enter a trade or if you've got a directional bias. But at the same time, what I want you to notice is this is a period separator. So this is the end of the day. Sometimes we don't hold trades. If you catch 100 points here, what's the reason of chasing a trade here? What's the reason of holding overnight? There's no reason. So if you're day trading, clean trade done for the day. If you miss this, you can still look for a trade here. You can still look for a trade here. All those entries are still perfect. The only reason I wouldn't keep chasing is because we are going into the next day and you end up paying swap, which is just a fee which these brokers charge you for holding your trades overnight into the next day. So this explanation brings me into Friday's setup. That's the main thing I actually wanted to talk about. So let's do Friday. Okay, let me just quickly check something here. Okay, okay. All right. So on Friday, again, like I said, one of my friends in the group mentioned they were looking at a certain level. I think they mentioned an imbalance to the left. I'm sure they were looking at this. Please, if you're watching this, correct me if I'm wrong. I believe they were looking at this, although I still remember they mentioned M30. But let's agree that we do have an imbalance right here. So remember, this was the day I was talking about. This was Tuesday. That's what we were explaining just now, this move here. Of all the trades we're taking, those buys, you see we are above the 13 EMA. So we were in line with the intra-day bias. So that particular move left a huge imbalance on the H1, which price played out on Thursday. You can see we came back into the imbalance, into the OB, then we threw some familiar candles. If you still are scared to enter here waiting for price to come above the 13 EMA, it's still fine, but we do have ways of getting into the trade maybe somewhere here. And that's clearly explained on what I just previously explained here. So you need your session timing. Are you a New York session trader or are you a London session trader? So just for clarity's sake, let's see when these spikes happen. So I'm going to quickly jump to TradingView again. Jump to M15. I just want to check Thursday's price action. for the session timing knots. So on Thursday, you see those doji candles which were on that MT5 just now. They were happening here on H1. So now, like I said, I'm a New York session trader. So when I come to the charts, I would have noticed this. This was my London session low. This was my London session high, which was near the previous day's high, which is this. You can see by the green line. I won't really go deeper into that. So again, I still have a buying bias. I still know about W patterns. I know about M patterns if I'm selling. I know about W patterns if I'm buying. So I do have this W pattern forming. What time did the stock market open? It opened right on this candle here, this green one pushing up. So without even going to a smaller time frame, this is an example of a market structure shift and a price retracing into a point of interest. So I think it's so nice that I started explaining this from Monday because everything I wanted to touch up on, all those setups are visible here. So again, 16:30 stock market opens right here with this bullish candle here. That bullish candle, what is it doing? It's breaking structures. It has broken the initial New York high right here. I have a buying bias. This black line here is an M15 order block based off the low of the day. So for me, it was just there. It was a point of interest. What I'm waiting for before I buy is for price to break a structure to show me they're pushing up. So remember I said your price is either going sideways or it was coming down. So if price was coming down, they do a liquidity sweep. I want to get a market structure shift. Price has to retrace into an order block, retrace into an imbalance, retrace into the equal lows, or retrace into this level here to give like an inverted head and shoulder type pattern for me to actually go long. And I'm only using 1 to 3. And these patterns, I mainly look for them on the M3 and M5. If you're trading indices, they'll still give you what you want and you still be very profitable. And yes, you can look for the same patterns in M15 and all time frames, basically, depending with what type of trader you are. All right. So what do we get here? Like I said, price pushes up. There is no market structure shift. Stock market is not yet open. Price pushes down. Then stock market opens with this candle pushing up. So we break a structure, we break a structure. That's the market structure shift, which we are looking for. This part here. Soon as we get that, what are we now looking for? We are now looking for price to come back and retest either this high, retest this high, retest an order block, which is also this level. This was also an inverted fair value gap. So his price was coming down. This was an imbalance, but it was respected now and respected twice. So again, this is all part of trade management. So people who feel like trading is easy, you really need to know what you're looking for when you open your charts. So on this particular day, like I said, price then retraced. Initially, we bounced off this level. We started pushing up. We broke this structure, had a nice aggressive push. So if you're in any buys here, your stop loss has to be below this level, right? To be clear, it has to be below this level. But for me, I think I actually took this trade and I think we shared a video of this trade, if I'm not mistaken. I'm not quite sure, but most likely I think we did. So entry, yeah, I remember we did. Please watch the previous video I shared. I think I explained this setup. Entry can be right in here, but sometimes you get a candle closing up here. So you might think, okay, this is probably 40 points already. You might have been in this trade, so you might want to enter here. So the rules are the same. If you enter at any point, your stop loss is to be below the last level you see or the last point where price turned. So if I was going to take an entry here, then my stop loss would have been here. But if I was confident with this level, my stop loss just had to be below here for a 1 to 3. And this price actually pushed up. They came back again into this level. And again, now you can see that 13 EMA, which I was talking about. And this is the 5-minute time frame. Same thing. After our market structure shift, price bounced off the 13 with a bullish engulfing. Price bounced off the 13 with a doji. Price bounced off the 13 with the doji. These are all areas where you can enter as long as you're confident with your direction. And again, where do you take profit? You take profit on the previous day's high, which was somewhere here. You take profit on 100 points. You take profit on the next level or the previous session highs or the previous day's highs if you're buying. So I hope, guys, I hope this is so clear. This is a lot of information. I feel like every 5 minute part I explain needs its own session. So if you guys want me to go deeper on these sessions, please let me know. But for those who have purchased this core concept or this this day trading mastery course for 2025, everything which you want will be there, and there's also free mentorship for you if you actually purchase this course where I'll just be explaining all these things. So this brings us to Friday setup. It's taking me a while to get to what I wanted to actually talk about. But you guys, I think it's now better because there's a build up of what's going on throughout all these days. So what are we looking for? On this day, I don't want to lie, I was open to seeing buys, right? Continuing up here, as I explained on this particular day. But what I noticed is price was trading below the 13 EMA, right? And this was the previous day's low. We came and touched. This is the setup I also wanted to explain. I've got a friend of mine who saw buys, but I think I told him my bias was a bit bearish, or rather wait, right? The reason I said wait is because yes, price has hit a zone, but let's look, you need to ask yourself this. Is it the right time of the trade of the day, depending with your session which you trade? What's the time? Okay, what's your bias? What's your daily bias? Where is your price most likely to go? Where is the price based on the 13 EMA? Remember, we want to trade what the price is doing, not what we want the price to do. So I think my friend bought. So I'm going to jump to TradingView and show you, because I remember they bought. So on that buy setup, I want to explain something. Because personally, I did not see the buy. I couldn't really see a buy setup until we came above the 13 EMA. That's when I was going to start looking for a continuation. Otherwise, I had already figured out that this price, since it's not showing me a clean buy, I don't think I'll take it. So coming into this day, what do you want to mark? I'm not going to concentrate on the Asian session for now. I'm just going to concentrate on the London session lows, London session highs. Then we've got this was the initial New York session open. These are just the things you need to mark up going into your trading time, right? Or into your trading session. So 1630, where is 1630? 1630 is where price just lifted off the previous day's high, which was our point of interest. So I think this is the setup they saw. What I want to explain is there is nothing wrong with this buy. The only thing I want to point out is the trade management. You need to know where your price is most likely going to get to. I feel like that's where most of us kind of get it confused. So if you zoom in, right, after this part was hit, or this low was hit from the previous day, yes, we are in a buy. M15 is showing us that they are in a buy motion. But remember, H1 has not confirmed yet. So if you're seeing a buy here, I want to explain how you manage this. With no confirmation, you want to take profits either on the previous sessions. Let me just put it this way. Take your profits on any point of interest which you see to your left-hand side. The immediate point of interest which you see, take your profits there. Do not hold for 500 points. Do not hold for a whole big move. Take what the market is giving you and call it a day. So what are we aiming for? If you're trading indices, especially with me, you know that we need 100 points. My 100 points, as you can see from my point of entry, is right here. That means the moment I'm in this trade, you can see it's also almost 1:3, depending with where you would have put your stop loss. On this one, I would most likely have put it here, just under the scan. Why? Because I know I'm trading against the trend. Why do I say I'm trading against the trend? Because this whole day, My price has literally been below the moving averages. So why would I force price to come up here? Unless or until I get price breaking these levels, pulling back and retesting a level like what happened on that other day, what I was just explaining, like a break and a retest, then we can consider buys. But at this point, price is trading below the 13, price is trading below the 50, price is trading below the 200. Even when you considered a buy here, you can see we were still not yet about the 13. So this buy is a high risk trade, number one, or a low probability, unless you know exactly what you are doing. So remember, where do you take your profits? 1:1, sorry, 100 points. That's where you scale out. Sometimes if we're really trading against the trend and we are conscious that we're trading against the trend, we only aim for 50 points because you never know, price might actually respect this imbalance because it's in line with this zone, and we also have a minor supply zone here, so we might actually bounce off here and push down since we are in a downtrend. You never know. So always take your profits, start scaling out at 50 pips, 50 points, and close out your trade at 100 points. Be done and be happy with that. Because what happened is price then aggressively dropped. So this is what I just wanted to mention. You can see price came, took out this liquidity, and this setup now became a sell, and the sell continued, right? So that's one thing I wanted to point out. And what did we say about the 13 EMA? If you're in a downtrend, once you know where your price is going, once you figure out that day that, okay, you know what, my price is simply trading below the 13 EMA on H1, so I'm looking for sales. You might miss the first sell coming off here. There's nothing wrong with that. You might miss the sell coming off here. Nothing wrong with that. But when your price comes back to the 13 EMA, this is where you should start getting interested in looking for sales. So if you enter your sell here, you want to put your stop loss here, but to the left, what do you have? We do have an imbalance here. We do have a zone here. So your stop loss cannot come here. Your stop loss has to be slightly above, because at the same time, remember, price had now broken what? The previous day's low, this red line you see here. So if we break, chances of coming up and retesting and going down are high. So if you consider a sell here, your stop loss simply has to be slightly above the previous day's low, right? If your stop loss is there, so let's just map out. I'm going to quickly map out 100 points. So from the close of this candle coming down, where's my 100 points? It's actually here, funny enough. Even though your stop loss is outside or the risk reward is not worth it, but can you get 100 points? Yes, you can, and you actually did. So even though the stop loss was big, your trade would still have been good. Okay, so let's do this. Let's say your stop loss is outside this range. My 100 points is here, but maybe I want to say at least let me get 1-1. In terms of direction for the session, I'm correct. Chances of me losing if I'm trading in line with the buyers are very low. You guys should actually test it out. As long as you figured out the day's direction, chances of the trade taking you out, if you give it room to breathe, those chances are very low. So remember, 1-1 looks like it's a bad risk to reward, but I'm getting 100 points. For me personally, 100 points is the sweet spot if you're trading indices. All right. So again, price comes. Okay. So let's say you watching price attentively. You see this candle close. Soon as this candle closes, that doji there, if you look to your left, you see that they actually took out this liquidity. So even that view you see from a high time frame, forget we are on the 5 minute and just think of how price moves. Price takes out liquidity and moves the opposite way. Price takes out liquidity, moves the opposite way. So liquidity was taken. So if I did not sell this, I'm definitely selling here. And if I sell here knowing that this is a liquidity sweep, my stop loss is not here. My stop loss is right here. So again, this is part of trade management, and you really need to go through most of our lessons for you to understand all these things I'm explaining right now. So from this point, then you could have looked for something like this. The normal 1 to 3. So again, part of trade management, our entries, it's either you're going to go for a 1 to 3 ARA risk to reward ratio, or you're going to go for 100 points. Anything above that is just a bonus. So our 100 points is right here. So the setup is perfect as it is. Or you can still even come just to the equal lows, because sometimes price will hit equal lows as you see here and it will retrace. So these are all the things you need to know. So they could have equally come here and retrace. You never know. As much as we are in a bearish motion, anything can happen. So that's why we always say never be greedy. In closing, let me say do not be greedy. Get the points which you know your assets usually moves. So you hear me, I keep saying 100 points, 100 points. It's because I've been watching how Nasdaq and US30 move. This applies for Nasdaq as well. For S&P 500, I'm not sure because I've never really back tested with that pair. But for Nasdaq and US30, this is the same way I approach. If you had missed all these entries, at some point, price is going to retrace, right? But you need to know what point is that whereby your price is actually retracing. So again, so if you see, this is exactly the same way I trade. I jump between H1, between MT5 and TradingView, because I just want to see how my price will move. I have different ways of viewing this price on the different platforms. So what you would have noticed here is if you look to your left, okay, before I even look to the left, as the price was coming down in a downward motion, at this point, price literally slows down. That's a full 1 hour of this doji candle here. Since I know that since we opened, we've been pushing down. Once I see the doji, I know that you know what, something is about to happen here. What do I have to the left? If I look to my left, I see from this low here, one, two, these three candles here, I do have an imbalance here. That imbalance there is where that price just stopped. So personally, I would have felt like, okay, this is a point of interest. So what should I do? Since I know that I'm looking for a retracement of this impulsive push down, what I'm now looking forward for is for price to retrace back to the 13 EMA, where it could still hit and potentially continue down. But now that I know that I'm also trading against the trend, I'm just looking for a short-term scalp where I can get a quick 50 to 100 points. Soon as this doji candle closes, remember, every decision you make, wait for the candlestick to close no matter what time frame you're looking at. No matter each time you say you want to enter, wait for the candlestick to close on the particular time frame you're looking at. So jumping to M15, you see there's a lot of candles right on that imbalance as well. Price is coming up. But from this low, a safe buy, let me point this out. Trading retracements might be a bit hard. If you're a beginner trader, do not trade retracements. I will repeat that. Do not trade retracements if you're a beginner trader. Because let me put it this way. From this low, this is an order block and the safe buy is above here. If you buy here, your stop loss, if you're an advanced trader, your stop loss might be here, but to be safe, it has to be outside the range. So now this stop loss and the reward we are looking for, it's highly impossible. Why am I saying that? Because first, we are pushing down. Second, we have a 50 EMA. We have a point of interest right there. So chances of this price pushing up are very low. And by buying here, it's a little bit too late. It's safe, yes, but it's late. So if you're a beginner trader, do not trade retracements. So on M5, let's see. Let me actually go to TradingView because I think I was stoking this nicely on TradingView. So on TradingView, I want you to notice this. So on the 5 minutes, what you see is price actually took out this low here, was taken out by this candle. Then price pushed up aggressively, breaking a structure, which left an order block in the zone, retraced and found that zone, also found the 13 EMA on the same spot. So my entry, if I'm taking this, would be at the close of this green candle with my stop loss right here, and I'm sure I'll be able to get a couple of points or at least a 1 to 3 trade. Remember, now I'm aiming for the previous day's low because I know ever since it got broken, it was not retested. Remember this break? Remember these two drops? It has not been retested, and I've now hit a point of interest on H1. On a smaller time frame, I'm now looking for my pattern. I just simply need to see a breaker structure retracement, and I enter and I aim for 1 to 3, or I aim for 100 points. So entry, stop loss, TP on the previous day's low. Sometimes if I see that the risk is too big, I even increase. So if I see the reward is too big, sometimes I just open up my risk to at least 1 to 3, something like this. And I always try to make sure I do not risk more than 30 points if I'm trading US30. So you want to calculate how many points are there from your entry. So a stop loss, which is here just below this candle, would have been perfect because your 30 points is right here. You see this area here, perfect risk. If your price takes you out, it's fine. You've traded your plan. This stop loss, however, is big, but based on the market structure now, you can still adjust your risk accordingly. So this is a 70-point risk in order to get what? About 223 points, which is a 1 to 3 trade, which is still perfect. So as long as you know where your price is going, market structure, you can plan your risk for that trade accordingly. Or otherwise, like I say, you can still aim for just 100 points, which would have been around about here. So if my aim is 100 points, I can simply put 1:2 raised to the 1, or I can even put 1 to 1, with the chances that my profit will be hit first before my stop loss is hit. So there's actually a lot of things which we can talk about, but this is what I mainly wanted to explain together with the buy which my friend took. I'm just hoping they took out, they collapsed their trade right on this New York Open, because I feel like if they understood this liquidity, hopefully they closed their profit there. Because if they held, then this price came and took them out. But yeah, guys, this is what I wanted to explain. This is part of the 2025 day trading mastery course, which we have dropping January 2025. So the main things we explain this in this course, it's the introduction to day trading, just the basics of trading, the core concepts of how we trade, which is mainly what I was explaining today, and other things as well, trading strategies which we use, because remember, each market style has got its own trading strategy. So you need to be equipped with all the tools. So this is where we explain everything. Then we talk about risk management, your risk to reward ratio, how you calculate your loss and all that. The psychology of trading. This is mainly mindset, and also part of trade management, which is also explained in practical application. This is usually where we do our live trading sessions. So if you purchase this trading course, you have free access to live trading sessions. Let me actually see if I can show you guys. Okay, just give me a moment. Excuse me. Okay, see. Okay, guys, just give me a moment. Just wanna forward it to the PC. So that I can show you guys. So let me do this, do this. All right, just a moment. Right. Oh, and I want to touch on something quickly as well. I hope it will help you guys. I just want to show you, okay, what's this? I just want to show you, some of the results we had this month of December, bearing in mind that it's a slow month. So this is what let me just put. Okay, I think I got it right. All right, we're back on yeah, so advanced topics, everything about trading, advanced, developing a trading plan. Then after you go through the whole course, if you still need support, that also comes for free. Then we do have some fundamental trading notes. If for those who like trading fundamental, there's a certain trading event which we trade, and it's explained with a live trading examples and results. And we also have bonus prop firm passing notes for those doing prop firms and you're struggling to pass your prop firm. There's some notes which you do have, and we do have our day trading results. So for the month of December, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. We had 9 trading days where we actually had some nice good results on all those trading days. We didn't really trade much since it was just festive, but on all these trades, if you're following the channel, I've probably did some um, videos explaining some of the trades we took and why we took them, and I've shown all the results as well. So for this day trading mastery course I'm talking about, I just want to show you guys quickly and I'll just explain how it's going to work. So it's in video format. You buy the course, you get all the videos to the course, which I showed you. So we do offer mentorship basically. We offer beginner trader. If you're a beginner trader and you just want to be mentored, it will go for $15 per month, which estimates to about 289 ZAR. This is in rands. So we've got rands and we've got dollars. So let me get a color. I'm going to use red. So here you go. We do have rands and dollars. Then if you are already trading, but you just need some assistance to, fine tune your strategy or actually use our strategy, you can join this mentorship. It's also on $100 per month and equivalent to 1880 ZAR per month. These are monthly payouts, monthly payments, sorry. Then the Pro Advanced Mentorship, this is basically once off. This is for someone who's already trading, who just wants a team, and it's just a once off payment. And after this, we can simply trade together because I believe trading is all about a community. So how much is this whole video course? It will be costing about 200 sorry, 188. It was actually 250, but we decided to put it down to 188. So if you need this day trading course, it's only costing 188, and this will come with free access to live trading sessions for anything you pay for. For any service we offer, once you pay, you get free access to live trading sessions. But if you only want live trading sessions and not the mentorship, then that will cost you about $10 per month. Then we only trade New York session, and we usually trade at least 3 to 5 days per week. It depends. If the first 2 days, if we are very successful in those trades, that will be it for the week. If we take one trade and we're very successful with it, that will be it for the week. But we only do at least 3 to 5 live trading sessions per week. And yeah, that will cost you $10. And if you want to get in touch, that's the WhatsApp number to get in touch with for any questions, any queries. Please do get in touch. And yeah, I think that's all from me, guys. I hope this helps you out. Um, the video I did today is simply showing you guys how we trade and what is part of this whole uh, day trading package that we have. So I hope you guys are having a good festive. Wishing you a blessed profitable and very peaceful 2025. That's it for me today, guys. Enjoy the rest of your day and have a blessed 2025.